We are back with James Demmert. He's Chief Investment Officer at Main Street Research. He's got some stocks that he thinks are very attractive right now. And James, let's begin with a trio of some of the biggest names in technology: Amazon, Microsoft, Alphabet. You like all of them. Why so? And let's try to go through each individually.
We do, Paul, and I think investors in this uncertain period with indiscriminate selling, a lot of fear out there, are forgetting that we are in an AI-led business cycle, tremendous innovation going forward, and I think that gets lost, in all the cloudiness of the selling. And so you take a look at some of those mega cap tech companies that really have come down tremendously in valuation, down 20, 25, 30% in some cases. We think that discounts a scenario that's not going to unfold. We do believe that the arms race for AI still is alive, and so each of these companies we think can play a significant role. Amazon, we think that business will be very robust coming out of this uncertain period. I wouldn't be surprised in the quarter coming up that Amazon or Microsoft or Google, they might suggest that they're a little concerned about the environment, but in our view, the hyperscaling of AI within these companies will continue to be the case. So the server business, which is a huge thing for Amazon, we think will continue to be robust. Microsoft, we continue to believe the same with that company. And of course, Google advertising, we think will come back on board. So we think here where stocks have really discounted a scenario that is worse than is likely to come out. We own less of those stocks from the time the market corrected, but we'd probably add back when we finally feel like this market's bottoming. It's somewhere around here, Paul.
Okay. Let's go to some stocks elsewhere. ECEC Bank, you like as well. Is this an Indian financial institution?
It is, Paul, and I think it's really important. We always think it's important, but now more than ever, be a global investor. This is an investment bank based in India. They're getting a lot of the business that is coming out of China for investment banking and banking in general, trading at 19 times earnings. It's one of the stocks that's really held up well during this environment. So as your investor, look for stocks that have held up well through this environment. That's giving you a peek at what might be working going forward. So that's one of our core holdings.
McKesson is also one that you like. This is a pharmaceutical drug distributor.
Yep, and 16 times earnings, so very reasonable. And this is a business whose at its core is a very consistent growth business. That's, again, what I want investors to look at, is companies that have consistent growth, and that pharma distribution business is consistent. Again, that's another stock that has really gotten through this very big downside much better than others.
And why is that? We're looking at the graph now. It is dramatically different than the shape of almost every other large cap stock graph out there.
Well, it's in the pharma distribution business, mostly in the U.S. It's not going to be affected if the drug makers get tariffs. And I think investors have just recognized that, as we have. And so that's a great core position to get us through this environment. And I would suggest investors look for other companies like that. They operate within their own borders, not only producing, but selling.
Okay, let's go back to the tech sector. Netflix is a stock you like as well.
They are a global powerhouse, but we really love them because it's a business that pretty much has a moat around it. What I mean by that, they have the dominant market share, really hard to penetrate, and those growth rates are really just growing more and more. And let's face it, if people are going to get disappointed in the market, they're probably just going to stay home and watch Netflix. So it's one of our core holdings. And again, here's a stock trading at 19 times earnings, growing at in excess of that.
Just to be clear, you would support the idea of investors, if they don't have positions in these stocks, to buy them at these prices, correct?
That's correct. And I would suggest, if you feel bold, buy your whole position. If you want to own, let's say, $100,000 of one stock, buy half of it today and wait till tomorrow or later on to buy the other half. Dollar cost average is not a bad idea.
James, thank you for this conversation. James Demmert is Chief Investment Officer at Main Street Research. Coming up.